Following Moscow's invasion of Ukraine, multinational companies have withdrawn from Russia in staggering numbers. More than 700 U.S. companies have scaled back, suspended, or exited their Russia business, including Starbucks, McDonald's, and Pepsi. Russia is Pepsi's second largest international market after Mexico. The company generated $3.4 billion in Russia in 2021, about 4% of its $79 billion in revenue.
Even though Russia is not perhaps as integrated into the global economy as some other emerging markets, even with this caveat, the fact that we now see this total exodus of Western multinationals will have a tremendous impact on Russia, both tangible and intangible.
But not every company is scaling back their operations in Russia. Over 190 companies, including International Paper, Koch Industries, and Emirates, are still operating normally in the country. So what led Pepsi's decision to pull back in Russia? And how likely is it for the soft drink maker to resume normal operations after the conflict is no longer in the spotlight? Pepsi got its start in Russia in 1959, when Soviet Premier Nikita Khrushchev sampled Pepsi for the first time at an exhibit of American products in Moscow. 15 years later, the soft drink maker opened a bottling plant in Russia, becoming one of the first Western consumer brands to be produced in the country.
I grew up in the Soviet Union, and some of the best memories of my childhood are of Pepsi Cola. So Pepsi was, of course, present in the Soviet market as the first Western company ever since the 60s.
And it was making investments in Russian businesses too. In 2008, PepsiCo and the Pepsi Bottling Company acquired a 75% stake in Russia's largest juice company for $1.4 billion. 2 years later, it bought Russian juice and dairy company Wimbledon for over $5 billion. The company's name, which sounds like the British tennis tournament, was meant to evoke a foreign brand due to a low standing of Russian-made products at the time. Following the acquisition, Russia made up about 7% of Pepsi's sales. In 2021, North American beverages at Pepsi made up 32% of net revenue, followed by its Frito-Lay North America snack division, which comprised 25% of net revenue. Sales in Europe made up 16%.
They are quite a different business than Coca-Cola, far more reliant on the United States, which accounts for about 50% of the business, and then certainly unique given the exposure to the salty snacks category.
But it was Russia's invasions of Ukraine which had an even bigger impact on Pepsi's Russia business. On March 8th, almost 2 weeks after the start of the conflict, Pepsi suspended the sale of Pepsi Cola, 7-Up, and Miranda, as well as capital investments and promotional activities. And it announced that it was donating $4 million to NGOs, including the Red Cross in Poland. The company said it would continue to sell products like milk, baby formula, and baby food in the country, and continue to support the livelihoods of its 20,000 associates and 40,000 Russian agricultural workers. Pepsi's Ukraine operations were also suspended, allowing associates there to seek safety for themselves and their families.
So they haven't transferred any of their assets. They are pursuing kind of more aggressive tactics. So what they've said is they're going to suspend the sale of the commercial beverages, no more incremental investments, and no advertising. But the assets remain within Pepsi's control.
So what factors led to the decision by multinational companies like Pepsi to suddenly pull back from Russia when other conflicts, including the Saudi-led war in Yemen, have been largely ignored? One of the last large-scale boycotts by multinational companies occurred more than 3 decades ago in South Africa. Partially assisted by the Comprehensive Anti-Apartheid Act passed by Congress in 1986, South Africa's economy was under pressure in the late 80s from both internal and external boycotts. In recent years, there have been a couple of big changes, according to Stanislav Marcus, a professor of international business. For starters, the political risk of international warfare is back. Second, the rise of social media means there is greater transparency in everything from documenting war crimes to visibility on which country a company chooses to operate in.
If you are the CEO of a company and you're listed in the wrong category, you're the one who's still seen as, Putin's friend. Again, however, justified that perception might be, that puts tremendous pressure on you to, not be seen in that very negative light. I mean, who wants to be associated with a war criminal?
Since the start of the invasion, the Yale School of Management has tracked the responses of over 1,000 companies, analyzing their decision to stay or curtail their Russian operations. The group found 298 companies had totally halted their Russian business activities or exited the country. 362 companies suspended operations but were keeping options open for a possible return. 110 companies, including Pepsi, scaled back their businesses. 140 companies were buying time, and 191 companies were continuing business as usual. Corporations exiting Russia could impact the country's economy in multiple ways, including the loss of jobs, the loss of investment, and the loss of Western technology. The decision could also force Russian citizens to recalibrate how they think about their leaders. Another trend which could impact multinational corporations is the move towards deglobalization and the rise of Cold War-era blocs, with China and Russia in one corner, the West in another, and many developing countries somewhere in the middle.
Obviously, globalization came only after the Soviet Union collapsed, and it was based on the idea that we're all part of a single market. That's no longer the case. It will be very difficult for corporations to say, take advantage of cheap labor in one market, take advantage of advanced technology in another market, and while at the same time, having a very efficient, lean global supply chain. That seems, to be heading for major trouble.
But despite those issues, analysts think Pepsi could have an easier time moving back into Russia than other companies, given its history with the country.
Yes, everybody is leaving Russia, and Pepsi, of course, has also suspended the sales of its beverages. I think it still has kept production of milk and baby formula for kind of what they say are humanitarian reasons, but no doubt they are also looking into the possibility of coming back to Russia as soon as possible.
The assets do remain within Pepsi's control, and so it's really just a business decision around whether they want to re-commercialize those beverages and resume production of those offerings.